Today, we're embarking on an in-depth exploration of Archer Aviation, a company that is truly on the cutting edge of transportation technology. Archer's focus is on developing electric vertical takeoff and landing aircraft, or eVTOLs, to completely transform urban air mobility. These aircraft are envisioned to not just be a novelty, but an essential part of everyday city commutes. Our mission at Archer is to make the dream of fast, safe, sustainable air travel a reality for everyone. As we delve into Archer's mission, technology, and future prospects, it's essential to remember that this presentation is for informational and educational purposes only. It's not financial advice, and you should seek the advice of professionals before making financial decisions. We hope you find this deep dive into Archer compelling, and if you appreciate this content, please subscribe and like. My name is Fritz, and this presentation was crafted on January 8, 2025. Let's lay the foundation by examining some of Archer Aviation's core details. Archer is publicly traded on the New York Stock Exchange under the ticker symbol ACHR. The company is based in Palo Alto, California, a hub for innovation and technology. Archer was founded in 2018 by Brett Adcock and Adam Goldstein, both serial entrepreneurs with strong track records. Adam Goldstein, our CEO, leads the company with a very hands-on approach and holds a computer science degree from Stanford University. He's not just a CEO, he's also a pilot who is passionate about revolutionizing transportation. To give you a bit of a personal insight, Adam is a passionate pilot, which goes beyond simply understanding technical aspects and involves a deep commitment to enhancing passenger experience. His leadership style prioritizes technological innovation, safety, and sustainability, values that are at the heart of Archer's operations. Now, let's get into what Archer actually does on a day-to-day basis. Archer's core business centers on the design, development, and production of eVTOL aircraft. Their primary goal is to revolutionize urban transportation by providing an affordable, reliable, and environmentally sustainable option. Their work includes a wide array of interconnected activities. A significant portion of Archer's work focuses on research and development, which includes the design and testing of the Midnight eVTOL. They also focus on manufacturing, which is being done through a partnership with Stellantis to ensure scalability. Archer also works closely with the FAA to adhere to regulatory guidelines and ensure the highest standards for safety. A vital part of their operation also includes planning and building the required vertiport infrastructure. Lastly, the software and technology division at Archer is focused on developing flight controls, navigation systems, and the general passenger experience. In 2025, projected revenue streams suggest that the majority of their revenue, 60%, will come from the initial sales of the Midnight aircraft. Maintenance, servicing, and replacement parts will contribute around 25%. And technology licensing will provide the remaining 15%. This breakdown is pivotal for our financial analysis, because it shows Archer's planned strategy for long-term, recurring revenue. What truly sets Archer Aviation apart from other companies is their unique blend of technological innovation and a strategic business approach. The Midnight aircraft is a major differentiator with its advanced tilt-rotor design, which allows for vertical takeoff and efficient cruise flight. The use of advanced materials and aerodynamics ensures smooth operations and minimal environmental disruption. Safety is at the forefront of all designs, and it has been integrated at all levels. Moreover, Archer's strategic partnerships with companies like Abu Dhabi, Stellantis, United Airlines, and NASA provide them with unique advantages. The manufacturing expertise of Stellantis, combined with United's strong market presence in commercial aviation, and NASA's expertise in the aerospace sector, are extremely valuable. Unlike many competitors, Archer takes a full-stack approach with vertical control over its entire value chain from design and production, up to flight operations, and their customer experience. Also, Archer emphasizes manufacturing for scalability using advanced technologies. Their proactive engagement with regulatory bodies has streamlined the entire process, and ensures that they meet the most stringent requirements. Let's shift our focus to the future and envision what Archer might become. Between 2025 and 2029, we can expect an initial launch of Archer in select urban areas. We should see specific routes, service frequencies, and pricing models being introduced. This launch will be critical to establish their operational credibility and gain public acceptance of their technologies. From 2030 to 2032, we will likely see a rapid expansion into new cities and regions, with the deployment of more vertiports. By 2033 to 2035, autonomous operations may also be gradually introduced, optimizing flight paths and reducing costs. Beyond that, we will see them expand into intercity travel, and even cargo delivery, with new opportunities for expansion. Finally, we can expect the exploration of new and advanced technologies like hydrogen-powered flight that will make their operations even more sustainable. Please remember that these scenarios are not a guarantee, and depend heavily on various factors including regulatory hurdles, technological improvements, and general market conditions. Let's dive into Archer's customer base and the segments that they're looking to serve. The major customers are airlines, private clients, urban mobility providers, and government/military organizations. Their partnership with United Airlines makes airlines the biggest potential source of revenue for the company. Archer's plan is to integrate their services into the existing airline networks. For their private clients, their goal is to create a premium experience and offer luxury and safety features. The company also sees great potential with urban mobility companies such as Uber and Lyft. Archer also has long-term contracts with governmental and military partners for research and development, and future opportunities are likely. Looking at their revenue breakdown, Archer has stated that they expect around 50% of their initial revenue to come from their airline partnerships, particularly with United Airlines. Around 25% should come from private clients, and around 20% from urban mobility providers. The remaining 5% would come from government and military partners. These projected revenue streams and diversification strategies are very important for evaluating Archer's future potential and financial stability. It's essential to understand the competitive landscape within the eVTOL market. Archer's competitors include Joby Aviation, which is known for its long-range aircraft and has a substantial market position. Lilium is a German company focusing on electric jets, and their technology is quite different from the competition. Vertical Aerospace is another company in the race, working with new designs and timelines, and Beta Technologies with its unique approach. Finally, Airbus is a major player in this field due to their size and technology. A comprehensive analysis of the technological specs, partnerships, and financial status of each competitor is essential to understanding the competition. Based on these analyses, the market share in 2025 could look like this. Joby could lead with approximately 30% of the market share, followed by Lilium with 20%. Archer is expected to achieve about 20%, and Vertical Aerospace with 15%. The remaining 15% is expected to be split between Beta and smaller companies. Archer's strategy is to leverage their full-stack vertical integration, while other players each pursue their unique goals. This in-depth analysis of the competition will prove essential to evaluating the potential growth of Archer in the long term. On this slide, we're reviewing Archer Aviation's income statements from 2019 through the latest trailing 12 months, or TTM. Our focus will be on the revenue and operating income trends. As you'll notice, there is no revenue to report, as Archer has not generated any income since 2019. However, on the expense side, we see a very clear climb in operating expenses, which have increased from $0.89 million in 2019 to $492.8 million in the most recent TTM. This steep increase is mainly because of the heavy investments in research and development, along with increased selling and administrative costs. Now, keep in mind these are necessary costs required to develop the company. At this stage, investors must be fully aware that there is currently no revenue, which explains the operational losses. The ultimate goal here is the commercialization of their technology, which will lead to future revenue growth. The cash position, currently at $501 million, looks good for now, but it does merit a further deep dive into the actual cash flow. This slide focuses on Archer Aviation's stock performance and its present valuation. The first thing we notice is the exceptional stock price increase of roughly 250% since October 2024. This rapid ascent can largely be explained by a blend of several factors: notable advances in the FAA's certification process, strong partnerships established with companies such as Stellantis, Abu Dhabi, and United Airlines, as well as the extensive media coverage. These events reinforced investor belief in Archer's long-term potential and fueled positive sentiment towards the budding urban air mobility market. Nevertheless, Archer's current valuation is considerably higher than its current financial standing. A significant degree of speculation is baked into the current stock price. The market is heavily valuing the company on its projected future profitability. These projections rely on the successful deployment of its eVTOL technology and securing a major market share in the future. The central question here is whether these future expectations will actually be realized. Therefore, as an investor, it's critical to acknowledge that the current stock price is predominantly predicated on future prospects rather than current, concrete revenue. Investors need to be well aware of the risks and opportunities involved with this valuation. To conclude our presentation, let's weigh the strengths and weaknesses of investing in Archer Aviation. The company benefits from a first-mover advantage in the growing urban air mobility market, and their strategic partnerships provide access to significant resources and expertise. The Midnight aircraft's innovative design and technologies provides a significant competitive edge. In addition, Archer benefits from an experienced leadership team that knows the market and a strong financial backing, which will provide stable financial security in the long run. Their partnership with Stellantis for scalable manufacturing will be a key component for long-term growth. However, there are also risks involved, including the need to navigate an evolving regulatory environment, while the company remains very capital-intensive, requiring very large funding for R&D and infrastructure. The intense competition could result in the erosion of market share, while the technology itself has yet to be proven over long periods of time. Finally, the market for urban air mobility remains unproven, and its adoption rates remain uncertain. With this in mind, investing in Archer comes with a high level of risk. Investors should carefully consider the pros and cons, and conduct their own research before investing in Archer. This concludes our presentation.